Here we're doing our Hurley Investments Market View commentary for June the 15th, and it's been an exciting weekend. And we've had a couple of things come over where people were having issues with the Money Block app, and so the first thing I want to do real quick is just to run over how to use the legacy version of Money Block, and you do that. Let me get the right thing up here. So when you go to Money Block, there's been a few things lately that the primary site, this blue site right here, has had a few errors here and there, and um, so I want to point out that you've got this Money Block Legacy link right up here at the top of your screen, just above the Open Account button. If you click on that, it takes you to this screen. Now, Legacy is their old platform, and it's separate from the current platform on the blue screens. The blue screens have some cool things, and it's a little bit neater to get around and stuff. But if you ever have problems with the blue site, you can click on Money Block Legacy. These are the tools that we use most because we can't do all of our group training and things like that on the other platforms. So we use the legacy version a lot. But if you click right here on login and you just use your same login user ID and you click on that, I'm just logging into one of my accounts that's not even funded yet. It's got $1 in it. But you can quickly see your balances right here, your positions if you have some, history, whatever you want. You can get all that stuff right here, and it's easy and convenient to get to. So I just wanted to let you know that the help file on here is not going to point you to anything helpful. It's going to say call us, right? If I click on help, it's not going to go anywhere. So that's it's not gonna help you, but you should be able to find and get around to the things that you want to get to very quickly, and you can get updated trade stuff. Unfortunately, we don't have. Oh, let me see. I got a question coming in. I gotta blow that up a little bit. Oh, excellent question. Yes, I'm gonna actually spend some time on that. Um, I'm going to spend some time on that, Nathan. Nathan's asking a question about the micron spreads, and so we're definitely going to talk about that. Um, so so what? Let me just. I'm going to go back to my thing here. So we've covered this first part of Money Block. It's a little bit more reliable if you use the legacy version. And there's no dual authentication, so you don't have to, like, if you don't have your phone with you or something, and you just want to log in, you can log in that way. So, but that's good. I'm gonna go ahead and scroll down a little bit. So I'm worried. I'm worried about something. What? Why am I worried? Does anyone have any guesses? Too much exuberance. That's a good. That's that's one of the things that's definitely a factor. Thank you, Maud. That's definitely a factor. What else am I worried about? That's a wonderful answer, Nathan. It's a healthy state of being in this business to worry. Exactly. Inflation, bonds, that's all a part of it. There's a bigger fact. There's something that doesn't happen very often that's happening this week that has me a little bit worried. Interest rates and a new Fed chair. That's exactly right. IPOs. So actually, that the big SpaceX IPO doesn't worry me at all because I'm not touching it. So I'm not worried about that at all. It may pull some money away from other investments or things like that for people that are getting a little crazy. Um, but uh, it doesn't bother me at all. I'm just completely ignoring SpaceX because they just don't have any fundamentals. The fundamentals that we do know about the company, um, they've lost billions of dollars, and now they're going to capital markets to get more. So it's I just I'm not touching it, so it's a good thing. I'm worried because of the Fed chair. So we have a brand new Fed chair, and this is what doesn't happen very often. We have a brand new Fed chair. He has no experience speaking to the public, and it's the first time a Fed chair speaks is almost always a disaster because they say too much. They don't learn how to tame their voice for the market to cause lower volatility. So every time a Fed chair speaks for the first time, almost always there's a big jump in volatility in the market, and it's just because they haven't learned. They do know, and I'm sure that they're trained. They do know that the market hangs on every single word, but on top of that, I'll get into that a little bit more in a minute. I'm also very excited. Um, yeah, Geithner made a particularly bad debut. Yep, you're exactly right. Um, I'm also really excited. Why do you think I'm excited? Any guesses? Good earnings overall. We've had some good earnings overall. Yep. That could just be a factor of inflation, right? Um, earnings when prices go up on everything, earnings come in better. Um, good one, Nathan. Yeah, I want your I want some referrals so that I can get some more accounts going. I'm always looking for to help people, so I would gladly take referrals if you have them. Um, no, I'm excited because we have we have some big events that are likely, they're highly likely to cause volatility in the market. And and it, and you guys, we've talked about this before, but our strategy for investing, um, there's one market that doesn't work well with our strategy, and that's a flat sideways market. And it's even worse if volatility expectations are high, um, and the market's going sideways. But we've got some potential catalysts coming up that are highly likely to move the market. The FOMC meeting is one of them. Um, the spending on AI and the bullishness of everybody just piling money into AI is one of them. Um, we have good earnings in a lot of the things that we're doing, uh, and I just expect, and we've got, and and I've said this before. Some of you have heard me say this before. Um, I've made so much money because I bet on when Trump took office for the second time. I bet that we were gonna have the guy is volatility. Whether you like him or hate him, he's volatility. Um, and so this last week we had an announcement on after the market closed on Friday. The war is over, right? Is it really over? That's my next question. Is it really over? Um, I'm not sure. I'm really not sure. Uh, because it sounds like both parties have agreed to something, this document of understanding, a memorandum of understanding, but I just don't know what that means. So And I know for a fact that something that's been talked about is that they're talking about they're going to table the nuclear issue, the nuclear development issues to later discussions. And how does that end? Who knows? I don't know. Um, so I'm just expecting volatility in the market, and that's a good thing for our strategy and our positions. Whether it's up or down, we really don't care. Um, So this headline right here just speaks about the Fed meeting. Will the Fed run into communication challenges at the June meeting? So we have a Fed chair that is being put into position because Trump wants him to lower rates. If he can get the rest of the committee to lower rates, that will be inflationary. And it will, I'm confident if they lower rates, or if they plan to lower rates, or say that they're going to continue the rate lowering pattern, um, that our market will react by rocketing higher. Now, if he doesn't say that, if he comes out and he says, I came in here to try and lower rates and get something down, but we've we've just got we've got to tame inflation first, then the market is going to react really big to the downside. Things will just collapse. And the thing that has me worried there is if we get a big collapse, um, it could be really bad, right? This could be really bad. And I want to talk to. There's another guy, um, and some of you may have heard this guy before. Some of you may not have. A guy named Jim Rogers. You might remember him as a founder with George Soros in the Quant Fund, um, that that they started together as co-founder. He was the guy who was the macroeconomist. So George Soros likes to be in business with a macroeconomist who keeps tabs on everything all around the world, and then he can go in and aggressively trade when they give him timing cues, right? And the first guy to do that was Jim Rogers. And every time he got on an interview with somebody to speak to someone in the media, he said, "I'm worried, I'm just worried about." So he's worried, and that's and as Nathan said, that's my job, right? That's what you guys pay me to do, is to worry for you so you don't have to. And um and so that's what we do. And but lately Jim has been talking about things, and he says the end will probably come soon, right? So I'm giving you that as a teaser. I'm going to cover this other stuff first, um, because it's going to work in the right order, right? Um, so we've got event risk coming up this week with the FOMC meeting. And some of you may have noticed an Micron bear put trade in your account this last Friday. Uh, does this mean we're now bearish on Micron? The answer is no, we are not. This is a short-term trade, and it expires on this Friday, the 18th. Or I'm sorry, it's Thursday. I put Friday, but Friday is a holiday. Friday is Juneteenth. Um, So that makes option expiration on Thursday the 18th. So why did we enter this trade? And this is going to get into your question, Nathan. The weekend effect. Has anyone ever heard of the weekend effect before? I know some of you may have, because I've taught this before to some of you um, when I was teaching. But and the other thing is to protect against event risk. So we've got an event that's coming up. It's a short-term event that the market's going to react to the new Fed chair somehow this week. And so we needed to have some protection. And now we got a bunch of Micron bull put spread, or sorry, bull call spreads. And those call spreads are almost all of them are really deep in the money. But and And so we wanted to have some protection just in case the Fed chair comes out and says something the market doesn't like and we get a shock event. We wanted to have some put protection on there, to make sure that we could take some profits on something like that. Um, yes, so the market did have a 10% increase really quickly. Um, and it actually went in the wrong direction for those puts that we want, because the market went up. So that's the market went up. We have puts. The market's up almost $100 higher. So Micron is closed today at 1097.47. So almost $100 higher than where we entered the trade around 1,000 on Friday. Um, and so I've got this fun little graph here. So this is the trade. This is the bear put trade that we did. And what I just want to show you is the time decay that we had over the weekend. So there's two factors going on here. First, the stock is $100 higher. So, but when we entered the trade, the stock was trading around $1,000. So everything that we invested was time value. And you can see that the put that we purchased, the at the money put around 1,000, was trading at 53.72. And today, you can see, at the close here, it was worth 13.86. So we we paid a hefty price, and volatility was really high. Now volatility is still really high. If we look at a Micron chart here, you can see right here the volatility went from Friday on 6/12, it was around 119.48 for and that was for the 30 day. It was different for the options that we were trading, but it's a similar result. And it's dropped down about 4 percentage points here to 115%. Um, so we've got that going on. And I built this graph here, and this curved line right here shows the value and the break evens as of today, or in this case, as of Friday. And the upper line is showing where the time value was on Friday, and the lower line is showing you the where the time value ended up today. So why do I like this? Why am I happy about this in this case? So we got somebody to pay a big hefty chunk of change. The option on that we sold, you can see we sold it for $1,800.22, or sorry, $1,822, 1822 in price, and today it's only worth 340. So we made up about $1,500 of that price on Friday. But what we really wanted to have was some protection there, and what we also really wanted is we want that time value because we're in the short time period. In the last month, time that value just decays at a swift rate, and the weekend effect is where the time value is still decaying on those options over the weekend, but the stock market's not open, right? The stock's not trading, so nobody can get in or out of the position, but time value is decaying over the weekend. That's what the weekend effect is. And so even on the call options, they went further in the money, but the volatility was higher on Friday than it is today, and that's how you can get, a stock that's doing exactly what you want it to do, but that time decay, you end up losing a little bit over the weekend, even though the market's moving in the direction that you want. Out of money options have less value than in, or deep in the money options have less time value than at the money options do, but there's still some time decay going on there. Um, and if it's moving in the direction we want, it's okay, because we're still holding on to it. and it'll be fine. That time value decays, and so that's the problem we have with a lot of these options. We have some of these options, micron spreads, out to March of 27, so we've got a long way to go on those, and they're deep in the money, and we just don't think we think that micron still is bullish. We still have room to go in this thing, but we took some short-term protection. We just wanted to get some short-term protection. It's not a big chunk either. Um, I think we did like one for every 10 positions that you had. We did one contract of this for every 10 positions you had, or around that or something. Um, but this could still work out really good. So if the Fed chair says something negative, our break-even point on this trade is at 964.50, and we've seen Micron move up $100 in a day. It can move down $100 in a day. If it does that, that's good because the time value is decaying on this spread so quickly that we'll get to the point where there is no time value on it, and the options, if this stock gets down, we'll be able to get close to a max profit if the stock gets down around 900 this week. So we're going to be watching this like a hawk this week. We'll be watching it really closely on Wednesday and Thursday as the market reacts to the Fed chair. And I keep saying Friday, but it's Thursday. Those 2 days this week, we're going to watch this very closely. And if it gets in the money at all, we'll probably lock in profits very quickly. So it depends on how the market's reacting. We'll be watching it and looking at it very carefully. So I just wanted you guys to know that's what our plan is. Now I need to get back to Jim Rogers. I love this guy. He's always worried because he was in the same business, right? He was trading for other people, and he's always worried, and so he is worried about the market. There's a whole bunch of things that he's talking about. He's widely known as a contrarian, right? So if the market is getting high and it's really bullish and everybody's talking about bullish things, that makes him worried and he wants to be a contrarian. So he'll be taking positions or getting out of positions when things are getting too hot. Um, so his warning right now is that everything's okay now, but if you ask me, the end is probably coming soon. He makes the comments, and if you listen to all of his other stuff and things that he's been talking about, he's made the comments that the amount of time that we have in a bull market, the longer it goes, the bigger the corrections or the crashes tend to be. He even said that when this crash happens, because it's been so bullish for so long, that it will probably be the biggest correction he's seen in his lifetime, the biggest crash that he's seen in his lifetime. And now he was trading through all like you know, he was trading through a lot of bad stuff. I think he ended his career in 88. So he went through the 87 stuff. He went through some nasty stuff, and he thinks that this correction is going to be even worse. Now he says, now Washington will say, don't worry, it's going to last forever. But I worry when Washington says stuff like that. He says some of the most fearful words you can hear is, but this time is different. And he's like, those are the most dangerous words to hear when you're a trader. The U.S.'s largest debtor, he's talking about the debt, the largest debtor nation in the history of the world, and yet it's higher and higher every day, every hour, he said. According to the U.S. Treasury Department, um, the debt stands at 38.97 trillion and climbing. That mounting debt could spell trouble ahead. Historically, when somebody gets gigantic amounts of debt, eventually it causes problems. I don't know when eventually is, but I hope I'm getting prepared. And I want to be prepared, right? And that's why I'm nervous. Um, yeah, Jim Rogers is a gold bug mod. He does have a lot of holdings in gold and silver, um, and it really is a commodity. They're both moving in the same directions now, and so he's still clinging a little bit. We don't always agree with these guys. He's a legendary investor, and he's really a a macroeconomist. Um, but the guy who executed the trades for him when he was really active and trading for other people, he was he Soros was doing the trading and he was just feeding the information out, giving him timing stuff. Um, yeah, so exactly. So he thinks the dollar will go up because we are a reserve currency, and until that changes, people are going to be looking into the dollar. So he's got a lot of money in the dollar. He's got a lot in cash right now. He's got a lot of gold and silver. Um, Gold and silver, gold is, I mean, it's all-time highs already. So I don't know that it's going to keep going higher. And if our reserve currency loses its status, um, then maybe gold will be some worth something and maybe be something to go to, but I doubt it. I don't think that that's going to change anytime soon because other countries will be in the same have the same issues that we have. Um, he loans a lot of U.S. dollars because people look for it as a safe haven. Many people in the world think the U.S. dollar is a safe haven. It's not, but people think it is. If I'm right, at some point as the crisis comes, the dollar will go up a lot, and I hope I will be smart enough to sell it. So now Jim Rogers was George Soros' first macroeconomist that he paired up with. Um, and then a little while later, he paired up with Stan Druckenmiller, who's also a legendary investor and a macroeconomist. His core thesis is to bet on the structural strength of the U.S. economy and artificial intelligence, the AI boom, while hedging for potential inflationary pressures. Consensus is right about 80% of the time. So Druckenmiller, before he left Soros, was during the dot-com bubble, and he was kind of late to the party, and they took a little bit of a bite um, when when the dot-com bubble collapsed, and that's what and Druckenmiller was like. It was so stressful at that time being with Soros and having to manage all the stuff. He was like, I'm done. And so he went off and did his own family thing, and that's what he does now. But here's the key points, and I love Stan. So Stan Warren Buffett averaged around 22%, 20 to 22% per year. He had losing years. Stan Druckenmiller's averaged about 30% profit per year in his family fund, um, and uh, and he's never had a losing year. And so when Stan says stuff, I really pay attention. I follow his list of stocks that he's in. He has to fill out his reports to the government and stuff like that, and to show his holdings every quarter. I follow those pretty well. I have scans for it and everything. Um, so when he talks, I really pay attention to what he's saying, and and he feels the same way I do, and the way our group does, right? We're all bullish on AI. We believe we're still in the early stages of AI growth story, and it continues to be confident in the long-term potential. Um, there's still room to go. That's why we're still in Micron. That's why we're still bullish on Micron. We're taking a short-term trade that's got a bearish bias to it, but that's just for some protection because we've got all these things that are really deep in the money. And as time decays on those longer-term investments, as long as the stock doesn't just get hammered and pulled back, and that's why we're taking some protection measures now, because we have an event risk that maybe could potentially cause that. So that's why we're doing what we do. The U.S. economy investment strategy bet on America. Highly optimistic about the underlying strength of the U.S. economy, citing ongoing fiscal stimulus and potential interest rate cuts. Now, I'm not sure about those interest rate cuts. And I'm not sure when he said that on here. This is just AI gathering a bunch of the things that he said recently. And AI is often wrong. I don't know that he still feels that way. Um, Contrarianism, he talks about, so he's a little bit different than Jim in that he doesn't mind entering a crowded trade if the overall trend is favorable and the thesis is solid. And he advises other money managers to focus on making concentrated bets on high conviction ideas, maximizing winning positions and get over market drawdowns quickly and move on to the next opportunity. So let your profits run, cut your losses short. That's a more complicated way of saying it, but that's the mantra, right? That's the mantra that we follow. Let me see here. We will probably we're most likely to just take profits on that bearish bet, because what we bet is that we're still in a bullish market. Our bet is that we're still bullish, and so we're just trying to cover short-term risk. So we'll probably close it, but I can't say for sure, because we just don't know how the market's going to react to some things. If this catalyst turns out that it's the catalyst that causes a tipping point for people to start belling on everything or something like that, then rolling probably will be, and it might not just be rolling, but it might just be buying a couple of puts for every share that we own. Um, so I'm not 100% certain, but my expectation right now is that this is a short-term blip, but we are still bullish, and that the market will recover, regardless of how things play out. Um, so that's a good question. Thank you, Nathan. That's a great question. Um, yeah. So and if it does turn into a recession, it we'll see what happens. But if it does turn into a recession, you'll notice most of your positions have protection on right now. And the thing is we had options on Micron were so deep in the money that we just really didn't have a lot of hedging to bet on if things turned around and came back down. So we just took a short-term precaution. So we'll see how that plays out, and we'll see what happens. But we just need more information, right? Um, and and so what I like about both Jim and Druckenmiller is they both talk about these big macro and economic things. They're really good at predicting those things, um, and trading their way. But what I really firmly believe is that we have a better method. Our strategy to hedge our positions. Um, if you ever get a chance to listen to Stan Druckenmiller uh, talk about diversification, and same thing with Jim. It's diversification is not a strategy to mitigate risk. Um, if you listen to both of these guys, it's diversification just doesn't offer real protection. Our strategy does. And if and we don't know where the top is going to be in the AI boom. Um, the bubble will potentially pop at some point, right? I don't know where or when, uh, but I'm but what we have is a strategy that lets us let our profits continue to run, and then when it stops running, we have protection that we can amplify as it starts going down. And if it continues to crash and continues to go down, we'll have we'll have put options where we can put the stock to people that we own. If we finally say, oh, look, the bubble's popped, this big run is over, let's just put these options to somebody else, or let's put these shares to somebody else at a much higher price that we were in to begin with. And that's what's beautiful about this strategy, is we're not we're not getting we're not taking big losses if we have a big downturn, because we're using that protection to make money as the stock goes down. And a lot of times it's just for protection, but when it's obvious that the run is over and the stock is getting slaughtered, we we can just put the shares to somebody else. We'll double up on those, and we'll put the shares to somebody else. We'll make money on the puts, um, and keep going that way. And so it's really good. Briefing.com, inflation remains elevated. CPI, PPI further accelerated above the Fed's 2% target. Rising Treasury yields have effectively tightened financial conditions, including pressure for the immediate Fed reaction, right? So what they're saying there is that the bond market has already priced in rate increases, And so they're kind of already they're tightening the yield curve kind of for the Fed already. They're anticipating it. Their anticipation takes some pressure off of the Fed to actually make its decision. So nobody's expecting. I don't think anybody in our office is expecting the Fed to change rates at all on this next meeting. Um, I'm not sure what they're going to say. I really don't. I know that the people who have been speaking have been saying that they're more worried about inflation than they are the job market. Um, but both of these reports, like it says right here, both these reports make it clear that inflation remains a problem. And if they're going to tame it, is are they did they put a guy? And this is what we don't know. We just don't know. That Warsh has been in the past. He's been a hawk. In the past, he's been a hawk when he was on the board of governors before. He's been a hawk, but lately he's been a dove. And Trump thought that he was going to put in a dove into this business, but is his dove going to turn into another Volcker, where he's like, I'm going to tame inflation no matter what it costs? I don't know. I just don't know. And I don't think anybody really does. And that's why the market is paying such close attention. Um, that's why the market is paying such close attention to this. I don't know. That's funny, Nathan. Nathan says, I don't think he might say happy birthday, Donald. You're going to lower your rates. No, I don't think he can because he's the chair of the board, but he's not the decision maker, right? Their decisions are made on consensus, and so um, I don't think he's going to be able to do that. But there are some people that are arguing. If you look at this core inflation right down here on this graph, the core is the blue line. It's actually a lot lower. It's the more volatile stuff, food and oil and gas that are really inflating everything else. But the core inflation remains actually not too far above the Fed rate, um, or the Fed's desired spot. The market has swam a few victory laps over these last few reports, aided by the hope that oil and gasoline prices are poised to disinflate with the news of a peace deal between the U.S. and Iran. So the Fed governors might be saying, we can afford to wait this time and not change our policy this time because those oil, the things that have everybody worried, are probably going to be just temporary, where they're coming down in price already. When I looked at oil, I think it closed today around. I think Brent crude was around 83, and Texas Intermediate was around $80 a barrel. That's down a lot from $112 a barrel, right? And I've seen gas prices coming down at the pump and everything. So we'll see what's happening there. Several Fed officials are not happy with the state of inflation, and they've averred to that in that it may be necessary to raise interest rates to get inflation under control. They've been debating about that. We had the most um, opposition to the Fed's decisions, and it was more about the way that they were speaking, right? It wasn't that they didn't agree last time. They just um, they didn't agree with they agreed on the Fed's policy rate, but they didn't agree on the words that were being said. They wanted to say that we're not necessarily in a rate loosening. We're not going to lower rates. We're going to shift towards taming inflation. They wanted to have wording that was more appropriate for potentially raising rates sometime in the year, and they wanted to get that off. So that's why the dissenters dissented that did, and I think there were 4 dissenters at the last meeting, which is like the highest we've had in years. So we'll see how they go, and that's why everyone's watching. That's why this meeting this week is so important. Um, It hasn't been quick to raise rates in the face of rising energy prices, though the Fed realizes it can't control energy costs, which are more volatile. Overall, it is cognizant that the price spikes associated with geopolitical events are often temporary. So that's what they might use for their wording in their upcoming meeting. So we'll see. The Fed isn't going to be cutting rates soon. It also has some cover with oil prices and break-even rates coming down to not raise rates soon either. The Fed doesn't need to, not when the market has done its bidding for it. Like I said, the bond market has already priced in rate hikes later this year. Now, technically, right? Technically speaking, the major indexes are bullish. We this big jump today, the Dow actually made new highs. Um, we're getting close on the S&P 500, and the Nasdaq made a nice big jump too. It's getting up there, but it got punished a lot worse than the others. Um, where will the S&P X? Where will the S&P end June? Lower, maybe, because the first week we were down 2.6%. We were up a sixth of a percent this last week. Uh, is are the moves we're going to have? I think the volatility is going to keep things in check there. So I think that it might finish lower, but we're still bullish. Lower, maybe lower in the short term, and it might be that the the last week of the month we have a nice big up move. We've got some earnings announcements coming up. None of these are our big ones that we're interested in. The Micron is their earnings are expected on the 24th of this month. So that's one that and that's one of the reasons why the volatility on Micron is still so high, because that stock can make great big moves. We've got economic reports, the ones that came out today: Empire State Manufacturing, Industrial Production, Housing Market Index. None of those really affected the market. Everything was all about the war ending. Tomorrow we have housing starts and permits, import and export prices. I still think the story is going to be the Fed this week. I don't think any of these other things, the petroleum status report, it'll just be, it'll probably give the Fed some cover. Um, we'll see business expectations and all that stuff. Really, the only thing that matters on Wednesday is the FOMC announcement and the FOMC chair press conference. That's what's going to matter this week. That's what we're really paying attention to, and that's what we got to watch. So and I'm really happy with our positions right now. We've got protection on almost everything. Almost everything's protected. We've had some huge run-ups. We're playing, especially with Micron, we're playing mostly with house money, right? We've already made gains, such huge gains on that stock, that what we have left is we're playing with house money. So risks are not huge. A lot of you are really heavy in cash, just like Jim, just like Jim Rogers, heavy in cash, right? Um, and that's one of the reasons why that's the best strategy. I got to tell you. So my brother is a real estate mogul, and in 2008 is when he had a big pile of cash, and he was able to come into the housing businesses and stuff and just buy properties left and right for cheap prices because he had cash. And so moving to cash before the big downturn is not a bad idea, right? It's not a bad idea. Um, so the fact that we have a lot of cash in a lot of your accounts is not a bad idea. But I think that our investments that we do have are actually positioned very well for some increased volatility. Whether the market goes up or down, I just don't know. But I expect that it's probably going to go down and then go back up, right? So we'll see how it happens. And this is the nice thing, is what we have when Jim Rogers is and Soros, when they were wrong, they took it in the shorts. They got their heads handed to them sometimes. Um, but they made out like bandits when the British pound crisis. They made a fortune. They broke Britain, right? They made a fortune, but it was high risk, high reward. Our stuff is higher reward, but it's still very safe. It's safer than a buy and hold on the S&P 500. And our history shows that, right? So we're protecting your assets. We're making sure we're not going to take it in the shorts if the market does decide to dive. If a catalyst comes out, we're going to be okay. That's what we expect. Now, and that's because when we plan our trades, we don't think that we know everything. We think it's impossible to know everything, and um, and so we position ourselves so that we can be wrong and still make money. And that's what our strategy works so well. All right. Any questions from anyone? Give you a couple minutes here. I've gone on a long time. You're welcome, Maud. You're welcome. I love talking about this stuff. My wife just rolls her eyes when I start talking about this. I get all excited and she just rolls her eyes and tries to find somebody else to talk to close by so she can get away from it. Awesome. Thank you, Nathan. Thank you. All right. Looks like we don't have any questions coming in. So I'm gonna let you guys I went a little bit long today, uh, and I've got some other stuff I gotta get going on. So I'll let you guys go. And um, I'm not sure if Kevin's gonna be back next week or if I'll be back next week. I'm not sure, but one of us will be. So we'll be here next week. That's the plan. And I hope you all have a wonderful weekend. And I think this is going to be a really fun week. I'm a little worried, but I'm also really excited. If we get big volatility, I don't care which way the market goes. It's going to be fun. So it's good to have you guys along for the ride with me. I'll talk to you guys later. Have a wonderful evening. Bye bye.